So, Fed meeting was today about potential Fed rate cuts. Now, they announced that they are not doing any rate cuts and are hanging tight. Now, I think this is a few things to unpack here. So, last month we saw a lower inflation report, which typically helps interest rates, but that was not the case because of all the tariff talk. Now, there has not been a lot of new news on the tariffs, but we still know that they're lingering around. They're not fully off the table yet. So that has the market makers a little bit scared on, is inflation going to rise in the following months? So no Fed rate cut. Why do I think this is a good thing? Every time the Fed has cut the Fed rate, it hurts mortgages. Rates go up. So if I'm looking at this from everything we've seen the past 12 months of rate cuts, this is good news. As a matter of fact, the 10-year treasury is down like 30 basis points. This is really good news for us in terms of rates got better because there is no rate cut. And I feel like this is because, as we know, the more inflation that goes back into the economy, the higher rates will go. So they view this as we are hanging tight. People are still hesitant to spend money, put that money back in the economy. If people continue to put money in the economy, we know that's going to hurt inflation. And with the tariffs, we don't know what that really looks like. So I would say no Fed rate cut is absolutely good news to me. I'm seeing it on my stock charts, not my stock charts, my mortgage-backed security charts, excuse me. So I think that this is all good stuff. Really what we are banking on is what's going on with these tariffs, what's going on with the CPI report next week. There's a lot of moving pieces still, but as of today, my personal opinion, no rate cut is good news for me because every time we have a rate cut from the feds, it hurts mortgage-backed securities. So good talking points with our people. Again, Fed rate cut does not help mortgage rates. Let's make sure we drill that into our consumers because we have a lot of people looking at this and it is not beneficial in my personal opinion right now. We need inflation to go down, we need tariffs to go away, and then we will really see mortgage-backed security rates improve. This is just my personal opinion, of course, but this is what I've seen, the trends I've seen in the past 12 months with rate cuts and everything like that. They typically are never good. They always hurt mortgage-backed securities, which always hurts our buyers. Now, I feel like today we have a little bit of breathing room. Rates are getting a little bit better. So if you have anybody on the fence, this is how I would phrase the conversation with them. Fed rate cuts always hurts mortgage rates. But hey, we'll keep moving forward. Big news next week with the CPI report. I'm curious to see how that goes about. Still keep an eye on what's going on with the tariffs. I'll let you know if there's any changes to that. Been a little bit quiet on that front, like I said on my Monday video, but if you have any questions, please let me know. Thank you so much and have a great week.